All right. What is up, traders? What's up, tycoons? Super excited for today's video on Marlin, ticker symbol POND. So we're going to be taking a look at pawn token, going over the three major levels of resistance that we need to break out for us to continue going up higher. We'll also go over the MACD and the relative strength index and how you can combine all of these things together to give yourself an edge in the market. Trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal and then know how to use those weapons so that way you can increase your odds of success on the battlefield. Remember, none of this video is going to be financial advice, but it is going to be a little informational on just some of the different indicators that you can use to help, really understand price action and why things are moving up and why things are moving down. So make sure to smash the like button, subscribe to the channel if you guys are new, and we'll hop straight into it. So the three major levels that you want to look at are going to be using the fib tool over here, and those are going to be the 61.8, the 50%, and the 38.2% retracement levels. The reason that these are the most important is because these are the most well-respected and the most common, okay? There are a couple other levels, but especially if you're new to it, you want to start off with these three levels. Now, this is how you spot trend continuation or reversal. So upside trend continuation would look like this: a move up, retracement, continue higher. And downside continuation would be a move to the downside, retracement, continuation lower. Now, that's clearly what we got over here in the past. We have the move down, we retrace up to our 61.8% retracement level, and then we continue that trend and make a new low, right? We have a low and then a lower low here. So, whenever you're in a downtrend, you need to be very cautious trying to go long at these three levels because there's a high likelihood if we don't break out from them that we could continue that downtrend, right? Now, if you catch a move down here and you start, riding that momentum upwards, this is where you want to throw some risk protection on, right? This is where you want to protect the trade with some type of a stop loss or whatever, maybe a hedge, something like that. Okay. So that's how you use those. Now you also use these to spot reversal. So if we come down, we retrace, we consolidate for a little bit, and then we break out. That's when we could possibly get a reversal and come back and test the previous highs. If not, create a higher high up there, right? So, here we got the retracement downtrend. If we take a look right now, given the update, we're still battling our major retracement levels, right? So we've had this move down, we've come back up, we've retraced, rejected the 61.8% retracement level, and we're still battling our 50% retracement level. If you look here, none of these candles have closed above the 50% retracement level. All right. But when it comes to, possible reversals, we are starting to consolidate, right? So we came down, we tested our level, and we're consolidating. We're staying above the 38.2% retracement level. If we break below there and start closing there on the daily chart, then it is a possibility that we're getting that trend continuation. But for now, this is that time for patience, right? And when you exemplify patience, you want to see if we're going to break out, retest our levels, and then continue upwards and get that reversal to test our previous high and possibly break out and make a higher high. Or are we going to consolidate here and then ultimately, keep rejecting our major retracement levels and continue heading back down lower? So that's how you use those. All right, now let's go into how you can spot some possible entries and exits. All right, if you take a look here, highlighted, we have a low and a lower low right here. All right, now if you look at your relative strength index, the RSI, obviously this is going to measure the relative strength of a token at its given price. So you see that we're in a downtrend right here. The token is obviously going lower in price, but we're not losing relative strength. We're holding our relative strength. We have a low here and then an equal low over here that we bounce off of twice. This would be a term known as bullish divergence. In this case, it's a slight bullish divergence because we're making equal lows rather than making higher lows, right? If we would have came here and made a higher low, it would have just been a regular bullish divergence. In this case, it's a slight bullish divergence. Now, you can combine this with the MACD to spot possible entries, right? So here's a possible entry due to bullish divergence. It's an indicator you may see bullish activity. And right here, you get a MACD entry signal, which is going to be the blue line crossing above the orange line. So notice how the bullish divergence happens first. It precedes this crossover, right? So you could take an entry here, but no one strategy is guaranteed 100%, or we would all be millionaires, right? If every strategy worked every single time. everyone would be day trading and no one would be losing any money. Now, what happens is over here, you get the MACD entry signal. So now you have two things telling you we could see some type of bullish activity. And sure enough, what do? We rally up very nicely, right? We got a very nice move. If you take a look from the MACD entry signal, which was right here, up to the highs, that was a 63% move. Very strong move. And then up here, okay, well, hey, we hit our major retracement levels. I need to throw some risk management on. I need to protect my trade. If I'm not already doing so off my initial entry, I need to, protect my profits up here, protect the trade just in case things reverse. And, you can feel comfortable knowing that, hey, you caught some of this move to the upside. And if it does reverse, that you protected the trade and you didn't give back those profits. Now, it happens again over here. If you take a look, we have a low, okay, and then we have a lower low right here as well. And so this is a really great example. You can never predict how much the move is going to be off of these indicators. You don't know if it's going to be 5%, whether it's going to be 20%, or whether it's going to be 50%. So that's why protecting the trade is very important once you start to get in profits and making sure you have a stop loss. So if the play does go wrong, in the first place, you don't lose too much of your money. Now, what we see here is, again, the low and the lower low, all right? And we have the low and we have the equal low. So we get our bullish divergence right here. And you see there is a quick bounce, but really we consolidate. After that consolidation, what do? We end up getting a MACD entry signal, and the blue line crosses above the orange line right here. Now, again, there was a nice move, and you can't predict whether it's going to be 20%, 50%, 5%. But in this case, we ended up getting about a 25% move to the upside after we got our MACD entry signal. So, the strategy won't work 100% of the time, but what you can do is combine two of them together and look for two or more signals, maybe a chart pattern, maybe something like that. And that can give you some more confidence in your trade, saying that, all right, well, not only do I have one indicator here with the bullish divergence, now I have two indicators right here of some possible bullish activity. And you can feel a little bit more confident in taking those trades versus just trying to buy blindly because, oh, hey, something fell and I'm hoping it'll go back up. You can use these strategies to help improve your efficiency in the trading market. Okay. So yeah, that basically wraps up today's video. We looked at the major retracement levels. We started to understand and explain why those work, why those are important to spot trend continuations or trend reversals. We're right in the middle of possibly doing a reversal, but we need to push higher, right? And we need to break past our retracement levels. We took a look at the MACD as well as the relative strength index to spot possible entries. And the same strategies work for exits too. Okay, so if we see some bearish divergence form and we see the MACD line cross down below, then that could be two signs of possible bearish activity in the future. So that's it for today's video. Okay, if you like this video, smash the like button, subscribe to the channel. I do view a request every single week as well. So if you did enjoy this and you want to see your token, your cryptocurrency in the next video, all you got to do is comment down below and I'll be happy to make a video on it for you. And I appreciate you making it this far. Okay, if you made it this far, you're probably going to enjoy one of these next two videos as well. So make sure to click on one of those.